All right, welcome everyone to the WPAY weekly update. This is the video series where we talk about how WPAY did on the week, specifically the underlying holdings, what worked and what underperformed the stocks. So let's take a look at these now. We can see just visually it wasn't a great week for WPAY. Only two stocks were up, Berkshire and Amazon. Berkshire had earnings this week announced on the 7th. And Amazon didn't have any earnings this week. They announced it last week. They were only up 0.08%. Putting that into context, we see the NASDAQ was down 4% on the week. WPAY, if you just look at a chart, a 5-day chart, was down 8.34%. So pretty much twice the return of NASDAQ to the negative. So yeah, Berkshire was up 4.51% today. The stock, for Roundhill, the Berkshire Weekly Pay ETF, they were up 4.87, so slightly more. And if you include the dividend that was paid, they were up 5.15%. Now, the worst performers on the week were the Coinbase one, the Strategy one, Hood, and Palantir. Those are all down a little bit over 10% each. The Roundhill Fund, for those, as you can see, was amplified even more. So in the case of Coinbase, when Coinbase was down 10%, the Roundhill Fund was down 13.92%. And the worst case was Palantir, when that was down 11.24%. The Roundhill Fund was down 14.92%. And of course, in this column here, I've adjusted that for the dividends too. So let's kind of collect this data and see what we get. So the average return of the stocks, average return was down 5.1%. We see visually only two winners, so out of a portfolio of 15, that means 13 stocks were down. Now the Roundhill average price return was down 7.31%. The Roundhill average total return is going to be slightly less, so down 6.26%. And we'll get the average distribution, 1.05%, and winners only one, which was Berkshire, and that means 14 stocks or Roundhill weekly pairs were down. The interesting thing there being that Amazon was up on the week, but Roundhill, their weekly pay ETF was down, so they didn't even get the direction right there. So now we'll see in this new column, 120% of goal, how these ETFs did. So where are we getting that 1.2 times? Well, if you look at any of the weekly pay ETFs here, we'll just pick AAPW, which is their Apple version. You'll see their goal is to provide weekly distributions and calendar week returns before fees and expenses equal to 1.2 times or 120% the calendar week total return of Apple common shares. So really what we're doing is we're testing to see, did they achieve that? So we just take their total return, divide it by the stock's total return for the week, and we see that none of them really did that. Now if you look at the ones that are over 120, so we'll filter that, or sort it, the ones that are over 120, those were all to the negative because all the returns were negative. And only this one hit it on the nail at 120%. This one, the Apple one, if you look at how Apple did, they were down 0.7%, and the Roundhill Fund, when adjusted for the dividend, was down 1.26%. And the only ones that kind of did okay, where it's less than 120%, were these, and that's where you, especially in a down week, you want them to be less than 120%, but not for Berkshire, which was up. You'd still want that to be 120%, but it didn't quite meet its goal. It was only 114% there. So looking at which did better, the stock or the Roundhill Fund, we can see that most of the time the stock did better in this week, which was 13 stocks did better, and only 2 Roundhill funds actually outperformed the stocks. Now, how did WPAY itself do? Well, the start of the week price, if you start the week on Monday, was $54.50. Close price $49.92. So price return, they were down 8.4%. And let's get the distribution. So the distribution that was paid was 56, almost 57 cents. So when you incorporate the distribution, the Roundhill total return was down 7.36%. So what does this data tell us, or what am I interpreting from this data? Well, I can see that Roundhill really does poorly in extreme down markets. So in these cases where most of the stocks were down, the Roundhill fund was actually doing worse than 120%. Let's take, for example, the Meta one. Meta was down 4.11% as a stock, but the Roundhill total return was down 6.19%, so 150%. So really you got 150% exposure to Meta this week. The unfortunate thing is that was all downside exposure. Take another example here, the Google one. Google was down 0.84% on the week. The total return was minus 1.4%. So you got 166% exposure to the price of Google, but on the downside. Now, when the stock was up, like Berkshire, it was up 4.5%. Your total return was 5.15%, so you only got 114% exposure to the total return of Berkshire, which is not enough to make up for all the losses there. So in a week where most of the stocks were down, Roundhill really underperformed the market here. Again, like I said, QQQ down 4.03%, Roundhill down 7.36%. Now, a few things else that I want to draw your attention to. We did have earnings come out this week for 4 of the companies, so Berkshire, AMD, Robinhood, and Palantir. You can see just from the colors here that AMD, Robinhood, and Palantir didn't respond well, or the markets didn't respond well to the earnings there. These two are also highly volatile stocks, Hood and Palantir, so down 11%. And we can see that, Roundhill does have some very volatile stocks like Strategy, Coinbase, Nvidia, Hood, and Palantir, but they also have stable ones like Amazon, Apple, Google, Microsoft. Berkshire especially is a stable one, and that's why it has the lowest dividend. Now, let's see which one had the highest dividend, and that this week was Hood and Palantir. So it makes sense, the more volatility, the higher the dividend that they're going to pay, because their formula for calculating dividends is based on, at least in part, volatility. And then the last thing I draw your attention to is that Nvidia is going to have earnings in 2 weeks from now, so on the 19th of November. So we can expect that maybe around that time, instead of getting a 1.13% yield on Nvidia, they might get a little bit higher yield, because we can expect more volatility around Nvidia for that week. So we'll keep an eye on that for sure. And then finally, looking at how WPAY has done just as a fund, we can see that their AUM has grown to over $500 million now, 540 million. Remember, the management fee is also still waived to 0% until September 30th, 2026. And they do have more weekly payers in the Weekly Pay suite. They have the Uber one here. They have, what else was new here? Alibaba, ARM, and Costco, which have not yet been added to WPAY. So WPAY is still the 15 funds that I'm tracking here, but once those are added, we'll start tracking them in this little portfolio that we're doing, and we'll see how those contribute to the returns of WPAY and Roundhill. So thanks guys for watching, and hope to see you in another video. Take care.